Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw. I'm a senior market specialist at FXCM. My email address rshaw@fxcm.com. Today is Friday, and it is the 5th of May. I'm just going to go ahead and bring up our disclaimers. I'll put the high risk investment warning up first. Just want to confirm that you guys can hear, see the slides and see me. Let me know. I'm assuming it should all be okay. Okay, thanks, Reggie. All right, let's just bring in the commentaries disclaimer as well. Thanks, Clarence. Okay, here's our references. We'll use Market Scope and Trading View. Just before we do that, I want to put in the chat the link for, we're going to do a live trade today on the non-farm payroll. So if you want to join, I've put the link in the chat. Just click on that and you can, of course, register. Everyone's most welcome. If you don't have it, let me know. Or you can email me for it. All right. Let's start off by looking at the DAX. Okay. Let's do a top-down analysis here. Still one of my favorite charts for this year, and that's because we've got a really good-looking trend here. We've got a higher trough followed by a higher peak, higher trough followed by a higher peak. I've drawn the trend line in. The trend line is really just defining the momentum of the trend, which is defined by the peaks and troughs. And I really like that the RSI is sailing along smoothly between 50 and 80. So the DAX to me is certainly a chart that is on the watch list. Where it gets, hey Zanetta, good morning to you. Gerdip says running out of steam. Perhaps. Let's take a look at this on the daily chart, and there's no doubt that the momentum has waned somewhat, hasn't it? It's dropped from zone 1 into zone 2. Zone 2 is our neutral area, so it's moved from the bullish area into the neutral area. So certainly some steam has run out, but the markets don't go in a straight line. So the zigs and zags are something that we want to pay attention to. What I do like, Gerdip, is that the RSI here seems to be ticking up. Okay, so that's the first clue, is that the RSI is staying above 50. So as long as we are above 50 and below 80, you know, we've got that smooth sailing that I mentioned earlier, and this tick up here is something that is interesting. There certainly are headwinds. We'll talk about the headwinds in a moment, but the narrowing of the bands and that zone 2, I think, is something for us that we need to keep our eye on. If you take a look at yesterday's price action is a doji, which is a candle of uncertainty. So whilst bears briefly tried to take price down, they were resisted, and while bulls tried to take price up, they were resisted. We closed flat for the day, but we maintained this neutral reading and the primary trend up, okay, with a really nice longer term momentum behind it. So let's go through to the to trading view now. Okay, and let's take a look at the squeeze. Okay, let's just take a look at the squeeze over here. That's interesting. It's a slightly different candle over here than what I had in my in market scope. Well, that's interesting. Anyways, let's put in the bandwidth. Okay, so go through to your indicators. in Bollinger Bandwidth. Okay. And it's an indicator that I like referring to because it shows that tightening, shows the tightening of the bands. And what's really interesting is that markets generally don't stay at rest for long, and the Bollinger theory suggests that we are cyclical in terms of volatility. When you have the squeeze, John Bollinger calls it the squeeze, when the Bollinger band squeeze, that's your precursor to a burst of volatility. And what we have here is that squeeze going on. So whilst there certainly is indications of sort of a flattening out of the momentum, that's that squeeze there, Gertie. The question now is which way is the momentum going to burst? Because Bollinger Band theory doesn't really make provision for the direction of the expansion in volatility. It just says that there's going to be an expansion in volatility, and that's where I think this is going to help us. This tick up in the RSI, is it guaranteed that we're going to tick back up into zone 1? Of course not. Of course not. But just this tick up over here, I think, is providing an interesting clue. And if we go down to the hourly chart, you can see we've got the crossover here for the EMAs. That's the 5 and the 10. And we've got the crossover in the stochastic. And very importantly, where is the stochastic sitting? It's sitting in the upper quintile. So there is a sense of a bullish momentum. The longer that we stay in the upper quintile here, the higher the likelihood we get a nice positive swing here. So this is looking very interesting to me. Certainly one for us to keep an eye out on. Now, remember, we've got the jobs numbers coming out later, so there's going to be volatility. So just be aware of that. But the idea here is primary trend up, squeeze in the neutral area, setting up for some sort of expansion in volatility. But the hourly chart sitting really nicely in terms of showing some positive momentum. So a very interesting looking chart. I want to do a similar type of analysis now for the US dollar. The US dollar has been quite challenging. I found it quite challenging, and that's a problem because my analysis generally starts from the dollar and ripples out. It's just that I wanted to show the DAX before we got to dollar today, because the DAX is looking interesting. But let's just take a look at the US dollar and see if we get any sort of clues what's going on here. Okay. All right. So I'm still looking at this as a topping pattern. Whether it completes or not, I don't know. Okay. We're still some way away from the completion. In other words, the head and shoulders has to take out the neckline. The momentum here is on the negative side. As long as the momentum stays on the negative side of 50, then we get closer and closer to the pattern completion here. I think this is significant, and I think it's significant because the dollar is generally regarded as a safe haven. If there is money coming out of the safe haven, it would suggest to me that it's moving more to the risk side of the market. What's the risk side of the market? Stock market, right? So there's no doubt about it that the Fed announcement on Wednesday acted as a headwind for the dollar, and you can see that it's pushed it right down into zone 3, our bearish area. Now take a look at this. This is another squeeze. So it looks to me as if we're setting up for a mass amount of volatility. We've seen that squeeze in the DAX. Now we're seeing the squeeze in that dollar. Let's just go through to our Bollinger Band width indicator and take a look at it again. Okay, so we'll just change this from German 30 to US dollar. Okay, and we've got a really tight squeeze going on here. Okay, you can see that there is a real potential for some volatility here. Now, again, there is no sort of provision for which side the volatility break is going to be, but we've got a few clues here. The clue here is that it is in zone 3, which is the low blue, lower red. It does already look like the expansion may be starting. We probably are at the peak of the rate hiking cycle. That potentially suggests some sort of headwind for the dollar. Or the squeeze here in the US dollar. And what we were saying is that we want some sort of clue for the direction. Well, it's in zone 3, and then just as we saw the tick up for the DAX, we're seeing the tick down here for the US dollar. So again, the squeeze in volatility here suggests that this is the precursor for an expansion, dare I say maybe even an explosion of volatility. What I'd like to see the US dollar hugging zone 3. If we get the dollar hugging zone 3, then we potentially get the liftoff in the risk assets. We've taken a look at the DAX. Let's just take a look at the S&P 500. The S&P 500 is a very interesting chart to analyze as well. So I'm just going to bring that up. And what we're going to do is just take a look at this on a weekly basis. 500, let's just bring that up. All right, and let's go through to the weekly chart. And let's just get rid of the bands here. And what you can see is that there is a pattern here as well. There's a pattern here. And what's happening with that pattern? It's a triangle and it's coming through to the apex. In other words, as we get through to the apex, the volatility is starting to contract. Now, what we want to see effectively is if we get the US dollar breaking down to the downside and we see a risk on type of move, we want to see the SPX break out to the upside over here. And we want to see that DAX move up outwards with an expansion in the volatility as well. All right. I'm going to ask for questions at this stage. I apologize for the technical issues this morning. A little bit frustrating, so I'm sorry about that. I want to just remind everyone that we're going to have our live trade today, the S&P, the non-farm payroll live trade. It's going to be we're going to start at 20 past 2 ZA, 20 past 1 UK. There is a link for that. I'm going to just send that through to everyone. And you can certainly join me and register, and we're going to do a live trade on a live account. Gertie's asking, a rising wedge, can it break down or usually up? I don't think this is a rising wedge. Let me see, how are you getting the rising wedge? A rising wedge, okay, I think I see what you're saying. Could be a breakdown. Okay, could be a breakdown. I don't see this as a rising wedge. Time will tell. Wedges tend to be smaller patterns. They tend to be of the continuation variety, whereas this is quite a large pattern. So it tends to be sort of reversal in nature. That's quite vague, Gurdeep, but what I am suggesting is that if we get a breakdown in the US dollar, okay, that leads the rippling out to a movement in the risk on sphere, the risk on space. Is that guaranteed? Of course not. There could be all sorts of headwinds that push money back into the US dollar. One of these can actually be, of course, the US banks. If we bring up US banks, it's really coming down. So take a look where the US banks basket is. It's at a very important support level. If it breaches the support level, it's going to pull S&P down with it. So it's quite important that the support level holds. In effect, what would be ideal here, and this is still subject to correction, is that these are good companies at good value. So your sort of JP Morgans, your Citibank, your Wells Fargo, all of these have really been beaten down, and it may be at a point that brings some buyers back in. And if it does do that, then potentially we get the support level holding. Then we can potentially maybe get that breakout from the S&P 500. This is all hypothesis. Whether it happens or not, we're going to have to wait and see, Gertie. But I don't see it as a rising wedge on the S&P 500. I see it more as a symmetrical triangle, some sort of sideways consolidation. Did that answer your question? The idea here is we're going to have to be quite sort of savvy and not predict, rather react. Okay, any other questions there? Please go ahead and type those in. Did everyone get the link for the live trade? Okay, cool. All right, let's wrap up here, guys. Again, I apologize for the technical issues, but I think by and large, we got most of it out at the end. I'm going to wrap up here, guys, and I will speak to you later for the live trade. Thanks very much.